Obama's crackdown on Wall Street, China's surging economy, it's been a roller coaster ride for the markets this week. So taking stock of all the twists and turns is Peter Dixon, global equities economist at Commerzbank Corporates and Markets. Peter, thank you so much for joining us on the show. Now, on the Obama proposals, we've heard a lot of bankers telling us this is draconian, this is a lot of concern because not only will it hurt profit, but it will hurt growth for the world economy overall. You seem a little bit more optimistic that actually in the end this will all work out.
I'm not convinced about that. I think in answer to the question, will it increase volatility in the banking sector, I said it will all work out. But I certainly agree that in the medium term, this cannot be positive for growth. It's certainly very, very bad for the banking sector. It's actually very bad potentially as well for government finances. I'm not sure they've actually thought through the implications of losing an awful chunk of revenue by limiting banks' activity. So I think, as your previous report said, a huge amount of uncertainty here, and the macro implications of this potentially quite dramatic too.
What does it mean for Europe, though? We were speaking to the Treasury Minister here in the UK, and he was saying, well, there may be some opportunities for certain relocation of certain banks in the UK or other European countries where maybe the rules are a little bit more lax.
Well, they're lax at the moment. I think the question really is what happens next. There are indications that perhaps the Conservative Party will think about putting in place some quite dramatic tightening of bank standards after the election, should they win it. And that, of course, will make things a lot more difficult for UK and European-based banks. So I think, unfortunately, we don't really know where this is going. But my guess is that, to some degree, countries across the whole of Europe will be implementing regulations of in some way, shape or form, which will make life a lot more difficult for all banks.
Peter, if we take out of this week the keyword uncertainty, is this going to rule the markets for the next couple of weeks? Are we going to see a correction? Is this going to be the one thing that after 8 months rally is going to plunge stocks lower?
It does start to feel like that. I mean, I thought that we might be able to get through to the Q1 earnings season, which is 3 months away, but it now looks as though a combination of moderate earnings numbers and a huge amount of uncertainty engendered by potential changes in regulatory environment could indeed be the trigger which causes markets to, in the worst case, sell off, and in the best case, perhaps just to stabilise.
Now, we had some good news coming in from China earlier on in the week. That helped markets get a little bit of a lift. Is this the real story behind it? Are we going to see more of an uplift from China?
I'm not convinced that China is necessarily going to give a huge amount of uplift to the world economy generally. It is a fairly closed economy. It meets any demand which happens in that particular economy via local sources. So it's not going to act as a locomotive for the rest of the world. And obviously, there are major concerns that if there is a boom and bust going to happen there, that could potentially spill over to the rest of the world via areas such as commodity markets, which in turn would be even more bad news for equity markets. So I think China is still a big risk rather than a potential source of good news.
And we also heard the Chinese government itself actually saying that they're concerned about overheating in the future. Peter, are we seeing any asset bubbles? Are we going to see them in the future? Are we already in an asset bubble now? You were mentioning commodities.
I think we are in an asset bubble within China itself, and we know obviously equities have rallied strongly, property has rallied dramatically as well. These are bubbles which may well pop. Certainly the Bank of China, People's Bank of China, will do its very best to limit further gains there. It's not entirely certain that this will spill over to the rest of the world, but certainly if the commodity universe takes a hit, then certainly this could spread out and hit certain parts of the industrialized world as well.
So, Peter, how do you position yourself in this kind of environment on a Friday afternoon? Stay away from commodities, stay away from financials?
Stay away from commodities, stay away from financials, be very careful about equities generally. I think be very selective about the safe havens in which you invest. AAA rated government bonds seem to be a good place to be, and cash if you can afford to stay there, because you're going to get no return.
Peter, on the equities, where are the safe havens?
The equities safe havens, potentially cyclicals with some upside as the economy recovers, but again, be very careful, because I think there's a lot of danger in all equities right now, given what's going on in the financial world.
Peter, thank you so much. Have a great weekend. Peter Dixon there. Well